Want to know how a 22-year-old college kid declared war on the most powerful tech company in history, nearly won, lost everything, then came back to build one of the most powerful investment firms in Silicon Valley? Here's exactly how Marc Andreessen did it. December 9, 1995. Netscape headquarters in Mountain View, California. Marc Andreessen is 24 years old, and according to multiple accounts from people who were there, he's sitting in a conference room staring at a Wall Street Journal article. The headline, which is documented in the journal's archives, reads something like Microsoft to bundle Internet Explorer with Windows 95. Now here's the thing that's verified in the reporting from that time. Netscape owns 80% of the browser market. 80%. Their stock, which went public just 5 months ago, has made Andreessen worth about $3 billion on paper. He's the youngest billionaire in America at this point. And Bill Gates, who controls 95% of all personal computers through Windows, just announced he's giving away browsers for free. According to interviews Andreessen gave years later, he looked at his team and apparently said something like, "They're trying to kill us. What happens over the next 4 years will be the most brutal business war in tech history. Andreessen will lose almost everything. But here's the part that blows my mind, the way he comes back. Nobody saw it coming." I'm Alex Morgan. This is Behind the Billion. And today we're breaking down one of the most insane business stories in tech history. Marc Andreessen, the guy who basically invented the internet economy, became a billionaire at 24, went to war with Microsoft, lost almost everything in the dot-com crash, then built one of the most powerful venture capital firms in Silicon Valley. I mean, we're talking about a guy who went from college student to $3 billion to basically broke to controlling $35 billion in tech investments. And here's the thing I found after spending the last week reading everything I could find about this story: shareholder letters, SEC filings, interviews, old magazine articles from the 90s, court documents from the Microsoft antitrust trial, the strategy Andreessen used. It's so aggressive, so controversial, that people are still arguing about whether he was a genius or just got lucky twice. Now look, most people know Andreessen as the venture capitalist, right? The guy who invested early in Facebook, Twitter, Airbnb, all these massive companies. But to understand how he became that person, you have to understand what happened in the 90s. Because the Marc Andreessen of 2009, the guy who starts the VC firm, he's a completely different person from the Marc Andreessen of 1995. The 1995 version is this brash, cocky kid who thinks he can beat Microsoft. The 2009 version, he survived a war, lost a fortune, and learned some brutal lessons about how power actually works in tech. So here's what we're covering today. First, how Andreessen creates the browser that changes everything while he's basically broke working at the University of Illinois. Then how he meets Jim Clark, founds Netscape, and becomes the fastest billionaire in American history. 16 months from founding to $3 billion. 16 months. Then, the war with Microsoft. How Bill Gates decides to destroy Netscape, and how close Andreessen actually comes to winning before it all falls apart. Then the crash, the dot-com implosion, watching his entire fortune evaporate. And finally, the comeback, how he builds Andreessen Horowitz into the most influential VC firm in Silicon Valley. And here's why this matters right now. Because if you look at what's happening with AI companies today, with these massive valuations, these brutal competitive dynamics, these young founders going up against giants like Google and Microsoft, it's the exact same pattern. The same strategies, the same mistakes, the same questions. Do you take the acquisition offer or keep building? Do you compete directly or find a different angle? Do you take venture capital money or bootstrap? Andreessen lived through all of this, made every possible mistake, and somehow came out the other side. So that's what we're diving into. Now, before we start, I need to be transparent about sources here. A lot of this story is well documented. The IPO numbers, the Microsoft antitrust trial, the AOL acquisition, these are matters of public record. But some of the personal dynamics, the conversations, the motivations, I'm piecing together from interviews Andreessen gave years later, from books like The New Thing by Michael Lewis and How the Internet Happened by Brian McCullough, from magazine profiles, from court testimony. When I'm speculating about motivations or internal thoughts, I'll tell you. When something's documented fact, I'll tell you that too. All right, let's get into it. (1992), Champaign, Illinois. University of Illinois at Urbana-Champaign. Marc Andreessen is a 21-year-old computer science student, and according to his own accounts in various interviews, he's basically broke. We're talking about a kid making $6.85 an hour working part-time at the National Center for Supercomputing Applications, the NCSA. His job, writing code, maintaining systems, doing whatever technical work they need. Nothing glamorous. Now here's the context you need to understand, and this is documented in histories of the internet. In 1992, the internet exists, but it's basically unusable for normal people. It's all text-based command line interfaces, academic researchers sending each other emails and files. There's no graphics, no images, no way to click on things. You have to type specific commands to navigate between different computer systems. It's a nightmare. Tim Berners-Lee at CERN in Switzerland has created this thing called the World Wide Web, which is basically a system for linking documents together using hypertext. But even that's hard to use. You need technical knowledge just to access it. And Andreessen, from what I can tell from his interviews, is thinking about this problem. How do you make the internet accessible to normal people? How do you create something that's visual, that's easy, that anyone can use? Because here's the thing he apparently realizes, and I think this is his genius insight: if you can make the internet easy enough for regular people, it stops being an academic tool and becomes a mass medium. And if it becomes a mass medium, everything changes. Commerce, communication, information, everything. So he starts working on this project with another programmer at NCSA named Eric Bina. And according to the documented history, they're basically doing this on the side, not as their main job. They're building something called Mosaic, a browser, a piece of software that lets you view web pages with images, that lets you click on links, that has a graphical interface instead of text commands. And here's the critical part. From what the reporting shows, they're building it to work on different types of computers: Windows, Mac, Unix. Because if this thing only works on one system, it's not going to take over. Now let me paint you a picture of what this development process looks like, based on accounts from people who were there. Andreessen and Bina are in the NCSA computer lab, often working through the night. This isn't some well-funded startup with venture capital and fancy offices. This is two guys in a university building, getting paid basically nothing, building software because they think it's interesting. According to Andreessen's later recollections, Bina was the better programmer, more technically skilled. Andreessen was more focused on the user experience, on making things simple and visual. They released the first version of Mosaic in February of 1993. It's free, anyone can download it, and based on the documented download numbers that got reported later, the thing spreads like crazy. Within a few months, thousands of people are using it, then tens of thousands, then hundreds of thousands. And here's what's happening. According to analyses from tech historians, Mosaic is making the internet usable for the first time. Suddenly, you don't need to be a computer scientist to browse the web. You can see images, you can click on links, it's intuitive. By the end of 1993, Mosaic is the dominant way people access the World Wide Web. And the number of web users, this is documented in internet growth statistics, goes from maybe 100,000 people to over 1 million. The browser is causing the internet to explode. Now, think about what Andreessen has created here. He's a 22-year-old making $7 an hour, and he's built the tool that's enabling the internet revolution. But here's the problem: he doesn't own it. The University of Illinois owns Mosaic. Andreessen gets zero equity, zero financial upside. He created something that's changing the world, and he's still broke. According to his own accounts, he graduates in December of '93 and moves to California, Silicon Valley, gets a job at a company called Enterprise Integration Technologies, making $40,000 a year. Which, look, for a 22-year-old in 1994, that's decent money, but it's nothing compared to what's about to happen, because there's a guy watching what Andreessen built with Mosaic, a guy who's going to change everything. February 1994, Palo Alto, California. Marc Andreessen gets an email that changes his life. It's from a guy named Jim Clark. Now, here's who Jim Clark is, and this is all documented. He's the founder of Silicon Graphics, a computer company that's worth billions. He's rich, he's connected, and according to Michael Lewis's book, The New Thing, he's also kind of restless and looking for the next big thing. Clark apparently read about Mosaic and tracked down Andreessen. And from what I've pieced together from various accounts, here's basically how that first meeting goes. Clark says something like, "What if we started a company to build a better browser? A commercial version of what you built at Illinois?" And Andreessen, who's 22 years old making $40,000 a year, is like, "Yeah, let's do it." Now, I don't know the exact conversation, I wasn't in the room, but based on what both of them said in later interviews, Clark saw the potential of the internet before almost anyone else. He understood that if the browser becomes the way people access information, whoever controls the browser controls access to everything. That's massive power. That's massive value. And Andreessen had proven he could build a browser that people loved. They found Netscape Communications Corporation in April of 1994. And here's the thing that's documented in SEC filings and press reports. Clark puts in $4 million of his own money initially. He owns the majority of the company. Andreessen gets a significant stake too, somewhere around 20% based on later reports, but this is Clark's company at first. Now here's where it gets interesting. They need to move fast because the University of Illinois is commercializing Mosaic separately, licensing it to a company called Spyglass. So Netscape can't just be Mosaic but commercial. It has to be a completely new browser, built from scratch. Andreessen recruits several of the programmers from NCSA who worked on Mosaic. They all moved to California. And according to accounts from early employees, they start coding this new browser at an absolutely insane pace. Let me give you a sense of the timeline here, because when I first read this, I had to double-check it. April 1994, company founded. October 1994, they released Netscape Navigator version 0.9, the beta version. December 1994, they released Netscape Navigator 1.0, the full commercial version. 8 months from founding to a finished product. 8 months. And according to reviews from that time, it's better than Mosaic. It's faster, more stable, has more features. Now here's the strategy, and this is documented in press coverage and Netscape's own statements. They give the browser away for free to individual users. Free. You can download it no cost, but they charge companies and institutions. If you're a business, you pay. If you're a school, you pay. It's the freemium model before anyone called it that. Get everyone using your software, then monetize the corporate users. And the thing spreads like wildfire. By mid-1995, this is in the documented stats, Netscape Navigator has about 75 to 80% market share. 3 out of 4 people browsing the internet are using Netscape. The company, which is less than a year old, is on track to make $55 million in revenue in its first full year. $55 million in revenue after 12 months. That's insane growth. But here's where Jim Clark makes the decision that changes everything. August 9, 1995. Netscape goes public, initial public offering. Now, normally companies wait years before going public, right? They build the business, prove the model, get to profitability. Netscape is 16 months old, 16 months, and according to SEC filings, they're not even profitable yet. They're growing fast, but they're losing money. But Clark and the investment bankers, this was Morgan Stanley leading the deal, they decide to do it anyway. And here's why, based on what I've read in analyses from that time. The internet is the story everyone wants to invest in. This is the future. This is the new economy. And Netscape is the pure play on the internet. If you want to invest in the internet in August of 1995, you buy Netscape. The IPO is initially priced at $14 a share, but according to documented reports, the demand is so crazy that they raise it to $28 right before the opening. And on the first day of trading, August 9, 1995, the stock opens at $71. $71. It closes the day at $58.25, giving the company a market cap of about $2.9 billion. Marc Andreessen, who's 24 years old, now owns about 20% of a company worth $3 billion. On paper, he's worth around $600 million, but the stock keeps going up over the next few months. By December, from what the stock charts show, Netscape hits about $170 a share. The company's market cap is around $7 billion, and Andreessen's stake is worth about $1.4 billion. He's a billionaire at 24. 16 months after founding the company. Think about that for a second. April 1994 to December 1995. 20 months from startup to billionaire. That's the fastest wealth creation in American history up to that point. Nobody had done that before, and Andreessen becomes this symbol, right? He's on the cover of magazines, Time magazine, Fortune, barefoot in a throne, this young genius who represents the new economy. But here's the thing I found when reading through the press coverage from that time. There's this arrogance that develops, and I don't mean that as an insult, I mean it descriptively. Andreessen is 24, he's worth over $1 billion. He created the tool that's powering the internet revolution, and from his interviews and public statements, you can tell he thinks Netscape is going to dominate. He makes these bold statements like, Windows will be reduced to a set of poorly debugged device drivers. He's basically saying Microsoft is going to become irrelevant. The browser is going to replace the operating system as the platform that matters. And in some ways, he's right. The strategic insight is correct, but there's one problem, a massive problem. Bill Gates is watching all of this, and Bill Gates has very different plans. Okay, so to understand what happens next, you need to understand where Microsoft is in 1995. And this is all documented in Microsoft's financial filings and in the books written about this period. Microsoft owns Windows. Windows runs on 95% of all personal computers. 95%, that's total dominance. And Windows is incredibly profitable. Microsoft is making billions of dollars a year. Bill Gates is the richest person in the world. But here's what's happening. According to analyses from tech historians and Microsoft's own internal memos that later became public during the antitrust trial, Gates initially underestimated the internet. In early 1995, Microsoft's internet strategy was basically non-existent. They had this online service called MSN, Microsoft Network, but it wasn't based on the open internet. It was more like AOL, a closed system. Then Netscape goes public in August of '95, and according to reports, Gates realizes he's made a massive strategic error. Because if Andreessen is right, if the browser becomes the platform, then Windows doesn't matter anymore. People will access everything through the browser. Applications will run in the browser, and Microsoft will lose control. So Gates makes a decision. This is documented in the famous Internet Tidal Wave memo he sent to Microsoft executives in May of 1995, a few months before the Netscape IPO. He basically says, the internet is critical. We need to shift our entire strategy. And one of the key elements of that strategy, Internet Explorer, Microsoft's own browser. Now, Microsoft already had a browser license from Spyglass, the company that licensed the original Mosaic code from University of Illinois. So they've got a starting point. But from what the reporting shows, Gates decides to go all in. He assigns hundreds of engineers to Internet Explorer. He makes it a top priority for the company. And here's where the war begins. December 7, 1995. Microsoft announces that Internet Explorer will be bundled with Windows 95 for free, not as a separate product you buy. It comes with the operating system. Every new computer sold with Windows will have Internet Explorer pre-installed. Now think about the competitive dynamics here. Netscape charges companies for their browser. Microsoft gives it away for free. Netscape has 80% market share. Microsoft has 95% of the operating system market. Every PC manufacturer, Dell, Compaq, HP, they all have to use Windows. And now Windows comes with a free browser. According to Andreessen's later accounts and press interviews from that time, this is the moment everything changes. Because Netscape's entire business model depends on selling the browser to corporations. But if Microsoft is giving it away for free, why would corporations pay? And if consumers can just use the browser that's already on their computer, why would they download Netscape? But here's where Andreessen makes a critical decision, and from what I can tell from the reporting, it's both brave and possibly insane. Instead of retreating, he goes on the offensive. He starts giving speeches saying Microsoft is anti-competitive, that bundling Internet Explorer with Windows is illegal, that Gates is using monopoly power in operating systems to crush competition in browsers. And technically, from a legal standpoint, Andreessen has a point. This eventually becomes the basis for the massive antitrust case against Microsoft. But in 1996, that legal case is years away. In the short term, Andreessen is basically a 25-year-old kid calling out the most powerful tech CEO in the world. And Gates, from what you can tell in his public statements and internal Microsoft emails that later became public, does not take it well. Microsoft pours resources into Internet Explorer, and here's what the version history shows. They release new versions constantly. Internet Explorer 2.0 in November '95, version 3.0 in August '96. Each version gets better, more features, more stability, and it's all free. Meanwhile, Netscape is trying to maintain its lead. According to their product releases, they put out Netscape Navigator 3.0 in August of '96, same time as Internet Explorer 3. And from the reviews, Netscape's browser is still better. It's more full-featured, more stable, users prefer it. But Microsoft has one massive advantage: distribution. Every new computer comes with Internet Explorer, and according to documents that emerged in the antitrust trial, Microsoft was putting pressure on PC manufacturers. If you want to license Windows, and you have to license Windows because that's what customers expect, you need to make Internet Explorer the default browser. You can include Netscape, but Internet Explorer has to be prominent. This is where things get really interesting from a strategic standpoint, because Netscape's not just fighting a product battle anymore. They're fighting a distribution battle. And in a distribution battle against someone who controls the platform, you're at a massive disadvantage. So what does Andreessen do? He tries to change the game completely. And this is where I think you can see both his brilliance and his inexperience. The strategy he pursues is to make Netscape Navigator into more than just a browser. He wants to turn it into a platform itself. (1997). This is when the browser war gets absolutely brutal, and I spent hours reading through press coverage, SEC filings, and court documents from the antitrust trial to piece together what's actually happening during this period. Here's what I found. Netscape's strategy, based on their product announcements and Andreessen's public statements, is to build what they call Netscape Communicator. It's not just a browser anymore, it's an entire suite. Email client, calendar, HTML editor, all integrated together. The idea, from what I can tell, is to create so much value in the Netscape product that even if Microsoft bundles Internet Explorer, people will still choose Netscape. They also start focusing on the corporate market heavily. According to their financial reports, they're selling Netscape software to big companies, positioning it as the enterprise solution for internet access. And they're building server software too, programs that run on corporate servers to deliver web pages. That's becoming a significant part of their revenue. But here's the problem, and this is evident in their quarterly earnings reports. Internet Explorer is gaining market share, fast. In early 1996, according to the stats, Netscape has around 85% market share. Internet Explorer has maybe 5 to 10%. By the end of 1997, Netscape's down to around 60%, Internet Explorer's up to about 35%. And the trend is clear. Microsoft is going to catch up. It's just a matter of time. Because every single day, thousands of new people are buying computers, and those computers come with Windows, and Windows comes with Internet Explorer. The default option is Microsoft. You have to actively choose to download and install Netscape. Now, Andreessen and the Netscape team do something really interesting here, based on the reporting. They try to build alliances. In January of 1997, they announce a deal with AOL, America Online. AOL will use Netscape Navigator as its browser for its millions of subscribers. That's huge distribution. According to press releases, this seems like a major win. They also push hard on the idea that Internet Explorer is anti-competitive, and this is documented in congressional testimony and complaints to the Department of Justice. Netscape executives, including Andreessen, are basically lobbying the government to investigate Microsoft for antitrust violations. The argument is that Microsoft is using its monopoly in operating systems to crush competition in browsers, which violates antitrust law. And here's the thing, they're right. At least that's what the courts eventually decide. In October of 1997, the Department of Justice files a lawsuit against Microsoft alleging antitrust violations related to Internet Explorer. The case will drag on for years, but the government is officially on Netscape's side. But legal battles take time. And in the market, Microsoft keeps gaining ground. By mid-1998, according to usage statistics, Internet Explorer has about 50% market share. Netscape has about 45%. It's basically even, and the trend is still moving in Microsoft's direction. I found this interesting detail in various accounts from employees at Netscape during this time. The company culture is reportedly getting more stressed, more paranoid. This isn't the euphoric startup atmosphere of 1994 and 95. This is a company under siege. Andreessen, who's now in his mid-20s, is apparently working crazy hours, doing press interviews attacking Microsoft, trying to rally the troops internally. But there's a strategic problem that becomes more apparent as I read through analyses from this period. Netscape's business model is breaking down. They're trying to give away the browser to compete with Internet Explorer being free, but that was supposed to be their main revenue source. The server software is doing okay, but it's not enough to support the valuation. The stock, which hit $170 in late '95, is now in the 30s and 40s. The company's market cap has fallen by about 75%. And here's where things get really complicated. In June of 1998, Microsoft releases Internet Explorer 4.0 bundled with Windows 98. And according to reviews from that time, Internet Explorer 4 is actually good, really good. For the first time, arguably, Internet Explorer matches or exceeds Netscape Navigator in features and performance. It's not just the default option anymore, it's actually a quality product. By late 1998, from what the market share data shows, Internet Explorer is over 50%, Netscape is declining toward 40%. Microsoft is winning. And I think this is the point where Andreessen realizes, or at least this is my read based on what happens next, that Netscape can't win this fight. Not as an independent company. The resources aren't there. Microsoft can outspend them, outdistribute them, and now out-innovate them. So what do you do when you're losing a war? You look for an exit. And that's exactly what happens. November 24, 1998. This is the day that changes everything for Marc Andreessen. AOL, America Online, announces it's acquiring Netscape for $4.2 billion. $4.2 billion. Now on the surface, that sounds like a massive success, right? Netscape's stock price had fallen way down from its peak, so getting $4 billion is a big win. But here's what actually happens when you look at the details. According to the deal structure reported in SEC filings, AOL is paying in stock, not cash. Netscape shareholders will get AOL shares, and Andreessen, who owns around 15 to 20% of Netscape based on various reports, will end up with a significant stake in AOL. But and this is critical, he loses control. He's no longer running his own company. He becomes an executive at AOL, which is a completely different culture, a completely different business. Now, why does AOL want Netscape? Based on analyses from that time and later reporting, there are a few reasons. 1, they get the Netscape browser technology, which they were already using anyway. 2, they get Netscape server software business and corporate relationships. 3, and this is the strategic part, they prevent Microsoft from completely dominating the browser market, because AOL has its own complicated relationship with Microsoft, and having the Netscape browser gives them leverage. But from Andreessen's perspective, and I'm speculating here based on interviews he gave years later, this has to be somewhat devastating. He created Netscape to be the future of the internet. He wanted it to be the platform that mattered. Instead, it's getting absorbed into AOL, which is seen even at the time as kind of an old-school internet company, a walled garden, not the open web that Netscape represented. The acquisition closes in March of 1999. Andreessen becomes Chief Technology Officer of AOL, and according to accounts from people who worked with him during this period, he's apparently frustrated, constrained, not able to drive strategy the way he could at Netscape. AOL has its own way of doing things, its own priorities. Andreessen is supposed to be this tech visionary, but he's now working inside a corporate structure where he's not in charge. Meanwhile, Microsoft keeps winning the browser war. By late 1999, early 2000, Internet Explorer has about 65 to 70% market share. Netscape Navigator, now owned by AOL, is down to about 25% and falling. The battle is over. Microsoft won. But here's where the story gets even crazier. Because while all this is happening, while Netscape is being absorbed and the browser war is ending, something much bigger is building in the background. The dot-com bubble. And Andreessen, along with almost everyone else in Silicon Valley, is about to get destroyed by it. Okay, so let's set the scene. It's 1999, early 2000. The internet stock bubble is at its absolute peak. And when I say bubble, I mean insanity. Companies with no revenue, no profits, no real business model, are going public and being valued at billions of dollars. The Nasdaq, which is the stock market index that tracks tech stocks, goes from about 2,000 points in late 1998 to over 5,000 points in March of 2000. It more than doubles in less than 2 years. And Andreessen, based on what his net worth was reported to be at the time, is worth somewhere around $1 to $2 billion. Some of that is AOL stock from the Netscape acquisition. Some of it is investments he's made in other internet companies. Because Andreessen didn't just sit on his Netscape wealth, he became an active angel investor, putting money into startups. Now here's what I found when reading through lists of his investments from that era. He put money into companies like LoudCloud, which was founded by his friend Ben Horowitz and was trying to build cloud computing infrastructure. He invested in other internet startups, e-commerce companies, web services businesses. And during the bubble, all of these companies are getting crazy valuations. But then March of 2000, the bubble starts to collapse. The Nasdaq peaks on March 10, 2000 at 5,048 points, and then it starts falling, at first slowly then faster. By October 2000, it's down about 40%. By October 2001, it's down about 70% from the peak. 70% of the value just evaporates. And internet stocks get hit the hardest. According to data on stock performance during this period, companies that went public during the bubble lose 80, 90, sometimes 99% of their value. AOL's stock price collapses. Andreessen's angel investments, most of them, either go bankrupt or become worth almost nothing. Now, I don't have exact numbers on Andreessen's net worth at the bottom of the crash, because he's not publicly filing disclosures anymore. He's not running a public company. But based on estimates from articles written during that time and his own later comments, his net worth probably fell from over $1 billion to somewhere in the low hundreds of millions, maybe 200, 300 million. Which, look, he's not poor, but he lost probably 70 to 80% of his wealth in about 2 years. And it's not just the financial hit, it's the psychological element, which I'm speculating about but seems evident from how his career changes. Think about being Marc Andreessen in 2001. You're 30 years old. 5 years ago, you were on top of the world, the youngest billionaire in America, the symbol of the new economy. You declared war on Microsoft and you lost. Your company got acquired, you lost control. Then the entire internet economy collapsed and you watched your wealth evaporate. According to various accounts, Andreessen leaves AOL in 1999, before the worst of the crash, but after the Netscape acquisition is complete. He starts a new company called LoudCloud with Ben Horowitz and a few other co-founders. The idea is to provide computing infrastructure as a service, basically what we now call cloud computing. It's actually a good idea, ahead of its time. But the timing is terrible. They found LoudCloud in September of 1999, right near the peak of the bubble. They raise a ton of venture capital, probably around $120 million based on SEC filings. They go public in March of 2001, right in the middle of the crash. And according to the IPO prospectus, the company is losing money, burning cash fast. The stock, from what I can see in historical data, immediately starts falling after the IPO. By mid-2002, LoudCloud is in serious trouble. They're running out of money, the market has collapsed, nobody wants to fund unprofitable tech companies anymore. Andreessen and Horowitz make the decision to sell off the main infrastructure business to EDS for $63.5 million in July of 2002. What's left is the software that ran the infrastructure business. They rename the company Opsware and focus on selling software to help other companies manage their computing infrastructure. It's a much smaller business, much less exciting than the original vision, but from what I found reading about this period, it's probably the right decision. It's about survival at this point, not glory. So by 2002, 2003, here's where Marc Andreessen is. He's in his early 30s. He's running a software company that's struggling to find product market fit. His net worth is a fraction of what it was. The entire internet economy he helped create has crashed and burned. He's not in the press anymore. He's not the brash young genius. He's just another entrepreneur trying to build a business in a terrible market. And honestly, from what I can tell reading interviews from people who knew him during this period, this is probably when Andreessen learns the most important lessons of his career. Because success, especially fast success like Netscape, doesn't teach you much. It's failure that teaches you. Losing a war to Microsoft, that teaches you about competitive dynamics and distribution power. Watching the dot-com bubble pop, that teaches you about market timing and sustainable business models. Running a struggling company through a recession, that teaches you about focus and discipline. The question is, what do you do with those lessons? Do you give up? Do you cash out your remaining wealth and retire? Or do you try again? And for Andreessen, the answer becomes clear over the next few years. 2007, Marc Andreessen is 36 years old and something interesting has happened. Opsware, that software company he's been running with Ben Horowitz, has actually figured it out. According to their financial reports, they've grown revenue to about $100 million a year. They're not massively profitable, but they're a real business. They've got customers, they've got a product that works, they've built something sustainable. In July of 2007, HP, Hewlett-Packard, announces they're acquiring Opsware for $1.6 billion. $1.6 billion. Now, that's not Netscape money, but it's still a massive outcome. And according to reports of the deal structure, Andreessen and Horowitz each make somewhere in the range of $200 to $300 million from the sale. So Andreessen is back. Financially, he's recovered from the crash. But more importantly, from what I can tell from his later interviews and public statements, he's learned something crucial. He's good at seeing the future. He saw the potential of the browser in 1993. He saw the potential of cloud computing in 1999, even though the timing was wrong. But he's learned he's not necessarily the best operator. Running a company through competition, through market changes, through operational challenges, that's hard, really hard. But there's something he might be even better at: identifying talent and good ideas early, then helping them succeed. Because during the 2000s, while he was running Opsware, Andreessen was also angel investing again. And according to lists of his investments, he was picking some incredible companies: Facebook, Twitter, LinkedIn. He put money into all of them when they were tiny. And here's what I think happens, and I'm speculating based on the timeline and later comments. After the HP acquisition in 2007, Andreessen and Horowitz are talking about what to do next. They've got capital, they've got experience both from huge successes and brutal failures, they've got a network of entrepreneurs who respect them, and they decide to start a venture capital firm. But not just any VC firm, they want to do it differently. Because here's the thing about venture capital: traditionally it's been run by people who have never built companies themselves. They're financiers, they're deal people. Andreessen and Horowitz are operators. They've been in the trenches. They've raised money, they've hired teams, they've competed with giants, they've dealt with product challenges and market crashes and everything else. So in July of 2009, they found Andreessen Horowitz, which everyone calls a 16Z because that's the abbreviation of the name. And according to their announcements at the time, the pitch is that they're a VC firm run by people who have actually built companies. They can help with strategy, with recruiting, with product decisions, not just write checks. Now the timing here is interesting. July 2009, we're right in the middle of the Great Recession. The economy crashed in 2008, credit markets froze, tech valuations collapsed. Most people think it's a terrible time to start a venture capital firm. But Andreessen, from what he said in interviews, sees it differently. Valuations are low. There's less competition for deals. The really good entrepreneurs are still building. This is actually the perfect time to invest. And the strategy they pursue, based on how the firm operates, is to find early-stage companies that are going after huge markets. They don't want small businesses. They want companies that can become billion-dollar outcomes, and they use their experience and network to help those companies scale. The early investments, according to the firm's portfolio, include companies like Skype, which they invest in before Microsoft acquires it. They invest in Twitter when it's still trying to figure out its business model. They invest in Groupon early. They invest in GitHub, the developer platform. But the strategy isn't just about picking good companies. It's about providing real value as investors. According to profiles of the firm, they build out this whole support system. They hire experts in recruiting, in marketing, in business development, and they make those experts available to their portfolio companies for free. If you're a founder backed by a 16Z, you can call up their recruiting team and get help hiring engineers. You can work with their marketing people on launch strategy. And this approach, from what I can tell from the reporting, resonates with entrepreneurs, especially entrepreneurs who are technical, who are product-focused, who need help with the operational stuff. Andreessen gets it because he's been there. He knows what it's like to be a young founder competing against giants. The fund performs incredibly well. By 2011, 2012, according to industry reports, Andreessen Horowitz is one of the hottest VC firms in Silicon Valley. They're getting access to the best deals, they're making smart investments, their returns are strong. And then they make a few investments that really cement their position. In 2010, they lead a round in Instagram when it's just a few people with a photo-sharing app. Facebook acquires Instagram for $1 billion in 2012. Andreessen Horowitz makes probably 10 to 15 times their money in less than 2 years. They invest in Airbnb when it's still early, still trying to convince people it's safe to stay in strangers' homes. Airbnb becomes worth over $100 billion eventually. They invest in Coinbase in 2013 when crypto is still mostly a fringe thing. Coinbase goes public in 2021, valued at about $60 billion. By the mid-2010s, according to assets under management reported in the press, Andreessen Horowitz is managing billions of dollars. They raise bigger funds, they expand into new areas. They start a crypto fund. They start a bio fund investing in life sciences companies. They invest in startups building AI before AI becomes the hottest category. And Andreessen personally becomes this influential voice in tech. He writes essays, he does podcasts, He's on Twitter constantly sharing his views on technology, business, politics, culture. He becomes known for this framework he calls "software is eating the world," the idea that every industry is being transformed by software and internet-enabled business models. By 2020-2021, Andreessen Horowitz is arguably the most influential venture capital firm in Silicon Valley. According to reports of their assets under management, they've raised something like $35 billion across all their funds. They've backed hundreds of companies. They've had multiple billion-dollar exits. And Andreessen's personal net worth, which I'm estimating based on reports of the firm's success and his stake, is probably back up to several $billion. He's recovered everything he lost in the dot-com crash and then some. But more importantly, he's built something that has staying power. Because the difference between Netscape and Andreessen Horowitz, right, is that Netscape was dependent on one product in one very competitive market. Andreessen Horowitz is a portfolio. If one investment fails, fine, you have dozens of others. If one market crashes, you're diversified across sectors. Now let me talk about some of the strategy here, because I think this is where you really see Andreessen's evolution as a thinker. Based on the firm's investment thesis that they've published and speeches Andreessen has given, they focus on a few key principles. 1, they invest in technical founders, people who can build products, who understand technology deeply. They're less interested in pure business people running tech companies. They want engineers and product people. 2, they look for big markets. According to Andreessen's writings, they want companies going after $10 billion plus opportunities, because their model is about hitting home runs, not singles. They'd rather have 9 failures and 1 Facebook than 10 moderately successful companies. 3, they focus on network effects and platform dynamics, companies that get stronger as they get bigger, that have winner-take-most characteristics. That's where the huge returns are. 4, they're willing to be contrarian. They invested heavily in crypto when most institutional investors thought it was a scam. They've backed companies in regulated industries that other VCs avoid. From what I can tell, this comes from Andreessen's own experience. The best opportunities often look bad at first. Netscape looked insane in 1994, a 16-month-old company going public, but it worked. And there's something else interesting about how the firm operates based on reporting about their culture. They're very thesis-driven. They write long documents, hundreds of pages sometimes, analyzing trends and technologies. They're trying to predict the future, to see around corners, and then they invest based on those predictions. For example, in the early 2010s, they wrote extensively about how mobile would change everything, so they invested in mobile-first companies aggressively. In the mid-2010s, they predicted that AI would become critical, so they started investing in AI infrastructure and applications early. In the late 2010s, they believed crypto would be transformative, so they raised dedicated crypto funds. Now, not all of these bets have worked out perfectly. Their crypto investments, from what public reporting shows, have been mixed. Some big winners, some big losers. The crypto market crashed hard in 2022, but the strategy is to be early to big trends, and being early means sometimes you're wrong, sometimes the timing is off. What's interesting to me, based on interviews Andreessen has done, is how he talks about failure now versus how he talked about it when he was younger. In the 90s, when he was at Netscape fighting Microsoft, everything was confident, aggressive, we're going to win. Now he's much more philosophical. He talks about how most startups fail, how timing is crucial, how luck plays a huge role. That's the wisdom of experience. The firm has also gotten into some controversial areas. They've invested in companies in crypto, which some people think is all speculation and scams. They've invested in defense tech, companies building software for the military, which some in Silicon Valley oppose. Andreessen himself has become a more politically controversial figure, sharing views on social media about regulation, about free speech, about technology policy that not everyone agrees with. But from a pure business standpoint, according to reports on the firm's returns, Andreessen Horowitz has been hugely successful. Their early funds have generated returns in the top tier of venture capital. Their portfolio companies include some of the most valuable private companies in the world. And Andreessen has built something that will outlast him, because the firm isn't just him anymore. They've got dozens of partners, hundreds of employees. They've institutionalized the approach. Even if Andreessen stepped away tomorrow, Andreessen Horowitz would keep operating. So that's the arc. from a broke college student writing code for $7 an hour to creating the browser that enabled the internet economy to becoming a billionaire at 24, to declaring war on Microsoft and losing to watching the dot-com crash destroy his wealth, to building a struggling software company, to finally creating one of the most powerful investment firms in Silicon Valley. It took almost 30 years, from 1993 to 2020, but Andreessen rebuilt. Alright, so why does this story matter right now? Why am I telling you about decisions Marc Andreessen made in the 90s and 2000s? Because if you look at what's happening in tech today, especially with AI companies, the exact same patterns are playing out. You've got these young founders, often technical people in their 20s or 30s, who have built something that could be transformative. Companies like OpenAI, Anthropic, Stability AI, and they're facing the same question Andreessen faced. Do you stay independent and compete directly with the giants, or do you find a different path? Because here's what's happening right now, as I'm recording this in late 2025. Microsoft and Google and Meta and Amazon are pouring billions of dollars into AI. They've got infinite resources, massive distribution, existing customer bases. They're doing to AI startups exactly what Microsoft did to Netscape with Internet Explorer. They're bundling AI capabilities into their existing products. Microsoft has Copilot integrated into Office and Windows. Google has AI in Search and Workspace. It's the same playbook. And the AI startups are trying to figure out, how do we compete? Some are taking strategic investment from the big companies. OpenAI took investment from Microsoft, but that means giving up some control, some independence. Others are trying to stay pure and independent, but then you have the distribution problem. And this is the lesson from the Netscape story. In a platform war, if you don't control distribution, you're at a huge disadvantage. Netscape had a better product than Internet Explorer for years. Didn't matter. Microsoft controlled Windows, which controlled distribution to users. Game over. So what's the alternative? Well, look at what Andreessen did the second time around. Instead of trying to build another platform company, he became an investor in platforms. Instead of competing directly with giants, he funded companies that could find niches, that could build defensible positions in specific markets, that could grow without going head-to-head with Microsoft or Google. And that's what a lot of smart founders are doing now. They're not trying to build the next general-purpose AI that competes with GPT or Gemini. They're building AI for specific industries. AI for healthcare, for legal, for finance, for vertical markets where the giants can't or won't focus. There's another pattern here that's relevant. The dot-com crash taught everyone that growth without a business model doesn't work. You can't just burn venture capital forever assuming you'll figure out monetization later. But in the early 2020s, during the zero interest rate era, a lot of companies forgot that lesson. They raised huge amounts of money at crazy valuations with no clear path to profitability. And then in 2022, 2023, when interest rates went up and funding dried up, a lot of those companies crashed. Same pattern as 2000, irrational exuberance followed by brutal correction. And the people who survived are the ones who learned from history, who built real businesses with real revenue and real unit economics. That's what Andreessen and Horowitz did with Opsware. They got focused, they got disciplined, they built something sustainable. And if you're building a company right now in 2025, that's the framework you need. Don't chase hype. Don't optimize for the next funding round. Build something people actually want, that they'll actually pay for, that has a defensible moat, because the market will turn eventually. It always does. And when it does, only the companies with real businesses survive. There's one more thing worth highlighting. Andreessen's second act, the venture capital firm, worked because he brought something unique. He wasn't just a guy with money. He was a guy who'd built companies, who'd competed with giants, who'd failed publicly and learned from it. He had pattern recognition that pure financiers didn't have. And that's true in every field. If you want to create massive value, bring something unique. Don't compete where everyone else is competing. Find the thing that you can do that other people can't. For Andreessen, that was understanding both the technology and the business dynamics because he'd lived through it all. Okay, last thing, the Microsoft antitrust case. This is worth noting because it's relevant to current debates about big tech. The Department of Justice sued Microsoft in 1997, alleging they were using monopoly power in operating systems to crush competition in browsers. The case went to trial. Microsoft was initially ordered to be broken up, though that was later overturned on appeal. Eventually, they settled. But the case had massive implications. It arguably slowed down Microsoft's ability to dominate other markets. It created space for companies like Google to emerge and grow without Microsoft immediately crushing them. Some people argue that without the antitrust case, we'd live in a world where Microsoft controls everything. And right now, there are similar antitrust cases against Google, against Facebook, against Amazon. The question is whether those cases will have similar effects, whether they'll slow down the giants enough to let new companies emerge. That's an open question. But the history suggests that monopoly power, left unchecked, kills innovation. Someone has to enforce competition. Anyway, those are the patterns. Platform power and distribution matter more than product quality sometimes. Timing is crucial. Being early to a trend is great, but being too early can kill you. Build real businesses, not just stories. Bring something unique to whatever you're doing. And understand that competition with giants requires either a different distribution strategy or a different market. So that's the Marc Andreessen story. From broke college student to billionaire to basically broke again to building one of the most powerful VC firms in Silicon Valley. Was it genius? Was it luck? Honestly, probably both. The genius part was seeing the potential of the browser in 1993 when almost nobody else did. The genius was understanding that the internet would change everything. The genius was pattern recognition, being able to look at technology trends and predict where they'd go. The luck part was timing. Netscape went public at the perfect moment, right when the internet hype was building. The dot-com crash happened after he'd already made some money. The founding of Andreessen Horowitz in 2009, right after the financial crisis, turned out to be perfectly timed to catch the next wave of tech growth. But here's what I think matters more than either genius or luck: resilience. The ability to get knocked down and get back up, because Andreessen got destroyed twice. The browser war with Microsoft, that was brutal. He lost his company, lost control. Then the dot-com crash, watching billions of dollars evaporate. Most people would have quit after either of those, would have taken whatever money they had left and retired. But he didn't. He kept building. He ran Opsware through the worst tech recession in history and turned it into a real company. Then he started a venture firm when conventional wisdom said it was a terrible time, and he built that firm into a powerhouse. And I think that resilience comes from learning the right lessons from failure. When Netscape lost to Microsoft, the lesson wasn't competition is impossible or the big guys always win. The lesson was understand distribution and platform dynamics. When the dot-com crash happened, the lesson wasn't the internet was a fad. The lesson was build sustainable businesses, not just growth stories. Those lessons shaped how Andreessen Horowitz invests. They look for companies with network effects, with defensible moats. They care about unit economics and business models. They understand platform risk. All of that comes from lived experience. Now look, I'm sure some historians will quibble with details in this story. I'm piecing this together from public sources, interviews, books, articles. I wasn't in the rooms when these decisions were made, but the core pattern is solid. The arc from success to failure to success again, that's documented. The strategies, the competition dynamics, the timing, those are all matters of public record. And the relevance to today, that's undeniable. The same battles are being fought right now. The same questions about platform power, about competing with giants, about when to stay independent and when to exit. If you're building a company, if you're investing in startups, if you're trying to understand how tech actually works, the Andreessen story is essential. Because it shows you that winning once doesn't mean you win forever. Microsoft beat Netscape, but they didn't beat Andreessen. He came back in a different form, in a different market, with a different strategy. And that adaptability, that ability to evolve, that's what creates lasting success. All right, that's what I found in the research. That's the deep dive on Marc Andreessen, from creating the browser to declaring war on Microsoft to building a venture capital empire. I'm Alex Morgan, and this is Behind the Billion. So that's the story of Marc Andreessen, 22 years old making $7 an hour to $3 billion at 24, to watching it mostly evaporate to building one of the most powerful investment firms in the world. That's a 30-year arc of success, failure, and reinvention. Now look, I've probably gotten some minor details wrong here. I'm synthesizing from a lot of sources, but the core pattern is clear. The guy who wins isn't always the smartest or the luckiest. Sometimes it's just the one who refuses to quit and learns the right lessons from failure. If this kind of deep research is valuable to you, if you want to understand how these companies and careers were actually built, not the sanitized PR version, but the real version with the failures and the near-death experiences, hit that subscribe button. I release new episodes every single day, deep dives into the billion-dollar companies that shaped our world. I'm Alex Morgan. Thanks for listening to Behind the Billion.